It's Ricky with Technical Solutions. Hope that you guys are all having an amazing Sunday. Today is February 26th and the stock market opens tomorrow. I'm going to start sharing my screen so you get to see exactly what it is that I'm looking at. This is our Sunday stock talk where we break down the top 10 stocks that you guys see value in. I do want to remind you that if you ever want to tune into one of these free live sessions, all you literally have to do is drop a thumbs up and of course, subscribe to the channel, turn on your post notifications just to make sure that YouTube alerts you when it is that I go live. So if you want me to break down your top stock, all you need to do is be subscribed to the channel and share it in the live chat so I can see, and only the people that are subscribed to the channel can actually participate in the live chat. So just make sure that you're subscribed, comment in the live chat, whatever top stock you want, and I would be more than happy to break it down. Remember, if I don't get to your question during this live stream, today is going to be a little short and sweet live stream. Feel free to message me either on Instagram or on Discord. And again, everything is linked in the description of this video. Discord is the first link. Instagram is the third link. So let's go ahead and get right into it. One of the things that I quickly want to cover is what we talked about in our video earlier today. A lot of people are asking the question, is the market about to drop even more? I do want to remind you that we are above the moving average on the day chart. This is something that we really struggled to do all of 2022. Now, from the start of 2023, we've been indicating signs of an uptrend. It's pulling on back right now, and we're testing a potential support zone right at that moving average, which is this green line that you see right on over here. All of 2022, ever since we broke below it, we struggled to hold above it. So nonetheless, this recent rally has been impressive. Now the question is, are we going to hold above 290, or are we going to break below 290 and then head back down to 260 a share for QQQ? So as of right now, we're still trading above. The market still hasn't broken its pattern. Yes, it has pulled on back, but just like anything, even during the most bullish markets always pull on back to the moving average, pull on back to the moving average. They pull on back to the moving average. So it would be an issue if we don't hold at these levels. But if we hold at these levels, then guess what? We can go back to retest that same resistance level right around 310. And it's not like we have an up and coming interest rate hike in the next week or two. The next interest rate hike is nearly a month from now. So please make sure that you are aware of that. So again, I really hope that you learned something new. And if it's not too much to ask, please make sure you drop a thumbs up, letting us know that you appreciated this live stream. Let's go ahead and get right into it. So the first one that people are asking me to break down is Tesla. And again, if you want me to break down your top stock, feel free to share that in the live chat. Tesla is right now on the day chart. So looking at the larger picture, a lot of our learn plan profit traders like to ask me, when do I like to look at shorter time frames? It's all based off of your intention. Obviously, if I'm going to day trade something, then my focus is going to be more on maybe the 1 minute, the 5 minute, or the 30 minute, right? Something that's more of like a relative time frame based off of recent patterns. But if I'm someone, right, that has an intention of either swing trading or I want to buy something and hold it for a number of years, then it's really good to kind of take a further step back and maybe look at the 4 hour, the day chart, even the week chart, right? To have a better understanding of where this stock is at and where the overall direction of this pattern is at as well. And we can see that Tesla was doing a beautiful job for 2020, 2021, and then 2022 happened, right? We broke below the moving average, and just like we saw with NASDAQ, we were getting rejected at the moving average, forming these lower highs and lower lows. We sold off. We tried to recover. Do you guys see the same thing acting as a resistance level, right? It's the moving average. It's literally like clockwork. So as of right now, we've pulled back enough where right now we're testing our support range. If the NASDAQ market ends up selling off, then Tesla will most likely follow as well, right? We'll go back to retest our support right around 175. If NASDAQ sells off even before then again, we'll sell off even before that support at that EMA. The question is if the NASDAQ still holds above that moving average and it goes back to retest that same resistance, then we can go back to retest the same resistance. And we all know one thing, right, is that if there's any one multi-billion-dollar company that trades like a lower cap stock, it's Tesla, right? So I would just be ready to see based off of how the market reacts, because just like when it goes up and it can overreact, we've seen Tesla overreact. So I'm an Elon fanboy as well, right? But I'm not narrow-minded in the sense that I understand when something is an overreaction. So just like we've experienced overreactions like this, right, from 100 to 200 a share in just 1 month, imagine experiencing a 100% return. That's what Tesla experienced, right? Just know that it can give it back just as quick. So I want to remind you of this, right? Because if NASDAQ does begin to sell off, then you need to understand that if there's an overreaction on the way up, there can be an overreaction on the way down, right? So please just take that into consideration, manage that position size. And if we do see that break of pattern on NASDAQ, it will most likely follow with Tesla as well. So please just make sure that you are aware of that you can tolerate worst case scenario if you intend to hold that position. So let's go ahead and break down Ford. I appreciate Zach for taking time and joining us for our Sunday Stock Talk. So hopefully we earn your thumbs up on this video, brother. Ford, as of right now, it's kind of like at that critical point where it's been testing that same support range. What is this? Mid of 2022. We haven't really made new lows, but we definitely have not made new highs. You can see that it's all been trading within this range. The thing that I like to ask myself is like, am I missing out by not being invested? And as of right now, at least for the past year, I can't say that I have, right? Ford has been kind of just trading sideways with that same support level at $10 and that same resistance level right around $13 a share. So if this thing actually begins to form and show signs of higher highs and higher lows, then great. But as of right now, it's kind of in that consolidation phase. So make sure that if you have a position, that it reflects a consolidation phase. And you might be asking, Ricky, what do you mean by that? Well, at least within our Learn Plan Profit group, we have this saying that if it's an active uptrend, meaning that if it's making you money, then it makes sense on why you have more money behind that position, right? Because it's making you money. But if it's a position that's kind of just trading sideways and you see potential in it going up, then your position size should reflect potential, not an active uptrend, right? So it shouldn't be a super aggressive position if you already have one open. So just make sure you take that into consideration, that you don't get too excited, right? I would rather be late to a rally than early to a sell-off, right? So please make sure that you are aware of that. So here we go. We got Christian Morales posting it in the ticker call-out format. Now, you know I have to break it down for you. I do appreciate you taking time and asking me to break down Pinterest. So this with the support at 24, resistance at 27. Pinterest with its recent potential change of direction. Pinterest is one of those companies that lost so much market cap based off of the sell-off that it experienced in 2022, right? From 2021, it peaked during the pandemic, sold off all of 2000, kind of like the better half of 2021 and 2022. Now we've been trading sideways, but again, it's that same concept. Are we missing out by not being invested? Well, not really, right? Because if you're part of my Learn Plan Profit group, let me ask you, what stage are we in from the 3 stages of a reversal? Are we still in the rejection phase? Are we in the consolidation phase? Or are we in the confirmation stage, right? If you're part of our LPP, you should know exactly what I'm talking about. There's stage 1, which is rejection, consolidation, which is stage 2, or confirmation, which is stage 3. So if I were to ask you, is this an active uptrend? Is this an active downtrend? Or is this a stage where we're consolidating, we're establishing a support level? I think it would be pretty safe to say that it's consolidating. So do you need to freak out right now? Like, I need to buy as much Pinterest as possible? No. Right now would, at least in my opinion, would be like, okay, I do see potential in Pinterest because it's sold off so much that it has huge upside potential, right? But I don't want to get ahead of myself, right? So if you take a small position, just understand that it does come at an extra layer of risk, but it doesn't have to be a super aggressive position, right? So you can either not take a position at all and either set your alerts and watch it very carefully, or if you do take a position, just make sure that you understand that you're buying early and it could sell off and that you have to manage your risk, and that buying on the way down isn't going to, I hope it's not going to be something that you want to implement when something has been so consistently selling off. So to keep it simple, right, in a perfect world, what would I tell myself if I was a complete beginner? I would say set an alert, and if this thing begins to become an active uptrend, then I would add to it. There's so much upside potential that I don't need to rush into this opportunity super early on if it's been selling off for 2 years. It's been selling off for 2 years. Even if you're 1 or 2 weeks late to the rally, just know that you have a lot of margin to work with, right? That's the way that I look at it. So we got love from India. I appreciate that. Thank you for taking time and watching. Let's see. What if I manifested the Los Chanchos? What's up? What's up? So again, if you guys want me to break down your stock, just make sure you share it in the live chat, and you need to be subscribed to partake in the live chat. So just a little heads up on that. So we got Diddy Wong asking me to break down Carvana. Please make sure that you post this in the ticker call out format. So again, I do not want to miss out on your call out, but please make sure that you post it in the ticker call out format. Carvana is kind of concerning to me. So Carvana is actually an Arizona based company. At one point, I thought it was really cool because I know the dad and the son, I think the dad was the founder of Drive Time, and then the son is the one that came up with the idea of Carvana. So both of them, after I think the guy from Discount Tire, Big O Tires, passed away, I think the two owners of Carvana, the dad and the son, were the two wealthiest people in Arizona. And then the pandemic hit and this thing went absolutely berserk, right? I mean, at one point, I think its market cap was like $30 to $40 billion. It was insane. But then to go from $376 a share all the way down to $3.55 a share. There's a lot of talk about this thing filing for Chapter 11 bankruptcy. There's a lot of uncertainties right now. So again, if I were to tell my younger self what I would do with something like this, it is so cheap right now. It is so bearish that if this thing does begin to recover, then great, I have time. So there's nothing wrong with studying alerts, right? But I do not need to buy the dip on something that simply continues to dip. And that's the way that I would view Carvana right now. It's that it's so dangerous because of how bearish it's been. It's literally has lost, I think 98% of its, 97.72% of its value in just the past 2 years. So just ask yourself, if it's been selling off for 2 years and it's lost 98%, it has huge upside potential if it begins to recover, but it's not recovering right now. So as of now, I would tell my younger self, keep it simple, set your alerts, and if it begins to indicate signs of an uptrend, then I would follow up with it. So let's go ahead and break down. We got the champion of war asking me to break down. I thought we broke down Nvidia. I guess we have not. I guess I broke it down in my head. We got Nvidia. Nvidia, after reporting earnings, I think Nvidia last week gapped up, if I'm not mistaken. Yep, it went from lows of 205 to highs of 238. So Nvidia has been on a consistent uptrend. And again, this is 100% just my opinion. I think that there's a reason on why Nvidia is indicating signs of an uptrend. I respect and I love seeing this overall uptrend. I would just be very careful with buying into it right now. The reason I say this, and this is my why, I think that it's due for a little bit of a retracement, a little bit of a correction because of its recent earnings report. That is what caused it to push up. So now if the NASDAQ market begins to sell off, it will bring the rest of the market down with it. So that is my concern, that because it's still hyped up based off of its earning report, and then if NASDAQ market does break its support range and it begins to sell off, then this will most likely sell off with it as well. And just as quick as it gapped up, it will overreact on the way down. And that is why I would say, let's stay patient, right? This is why I'm focusing on this week is asking that question. Is NASDAQ market going to hold above the moving average? That is all I'm paying attention to. I don't know about you guys. I can't speak for yourself. I mean, there's a lot of different ways to trade the market, but that is what I'm mainly paying attention to. If we hold above, I'm going to go long. If we break below, I'm going to go short. And it's making those minor adjustments and keeping your trading simple enough, right? You don't have to overcomplicate it. People love to ask, Ricky, why do you continue to always trade the same pair of ETFs? Well, if those are the ones that I'm doing well with, why do I need to trade thousands of other stocks to impress other people? Isn't the whole point just to make money? So if I find a pair that I work well with and I make money with those, then why overcomplicate it, right? Again, keep trading simple. Alrighty, so NASDAQ futures are pushing up. I did see that. So I was looking at NASDAQ futures and I saw that they were up 0.2% when I was looking at it, and they're up 0.25%. So that means if the NASDAQ market were to open right now, TQQQ would be up 0.75%. So that's really cool to see. All right, let's go ahead and do how many more breakdowns. So let's do 3 more breakdowns, and I'd be more than happy to break it down for you. So again, drop a thumbs up on this video, subscribe to the channel, and let's share your top stock in the live chat and let me break it down for you. So we got CLNE. What's going on, James? CLNE. All right. So right away, I do not like this. It's a consistent descending pattern. A lot of consolidation here. You can set your alert, and if this thing begins to take off, then great, so be it. But it's very easy for me to see that when it does take off, it does not last. And again, at least in my experience, these are huge red flags for pump and dumps. You might think that, oh, I could get lucky and I can, how much money could I make? But remember, are you quick enough to enter and exit appropriately during that time? And these aren't positions that you necessarily want to buy into it, wait for that to happen, and then sell. It's just something that can get very dangerous because you think that it might happen now, but what if it sells off and then the rally happens later down the road? You're going to end up back holding a position that's really not worth much, right? So again, don't put yourself in a position in which you cannot tolerate. And this is not a market where you want to get lucky, right? This is a market where you want to try to stay calculated. And by you entering a position and just hoping for something to happen, hope is going to be a very dangerous habit to try to work with in the stock market. So please be very careful about that. So you never have anything positive to say about these stocks. That's not true. Last week I broke down a stock that was pretty interesting, but my thing isn't necessarily to agree with everyone's call out. I don't think that's why people tune on into my videos. It's for me to point out what I would look for before entering a position, right? Why would I only say a bunch of positive things about a stock and not talk about any of the downside risk, right? Isn't the whole point of me to bring awareness to the stocks? Because if I didn't, then you could be like, oh my God, Ricky, all you ever do is hype every stock up. But I'm the opposite, right? I agree with you that I'm very often kind of like the devil's advocate in the sense that I do try to look into, well, what's the risk? Because that's most often what beginners don't pay too much attention to. So I'm answering your questions based off of how I wish when I first got started, someone would give me constructive criticism. I'm not trying to be rude with any of your call outs, or I'm not trying to subjugate anyone, right? I'm trying to bring awareness of risk. And I think that is how I view my job on YouTube, is to bring awareness of the downside. A lot of you guys might still agree with your play, but I just bring awareness to potential holes in that play. And I think that's what matters most. So if that offends you, then I guess to each their own. Alrighty. So their financials come out on Tuesday and it's expected to be positive. I never. Yeah, you could be right? And it could take off. I just don't think those things ever hold. Just based off of even its track record, it just doesn't hold. Alrighty. Here analysis is always on point. I hope it's not a good indicator. I appreciate that. Thank you. Let's go ahead and break down. We'll do Spotify. Jatin asking me to break down Spot, which is Spotify or Spotify Tech. So again, this one based off of recent patterns, lower highs, lower lows. One thing that I do like about this is that we are trading above the moving average. It just gapped up so much that it's now pulling on back a little bit. And you kind of want that, right? When something rallies, you want it to kind of correct itself to form higher lows and then continue to rally. So as this thing begins to retrace itself, right, and begins to pull back, all I would begin to look for is a higher low. So as long as it holds above the EMA or the moving average and it doesn't go as low as it did before, that would actually be progress and a step in the right direction for Spotify. There's huge upside potential. Obviously, it's been struggling based off of recent patterns, but that's what I would look for as of now, a higher low. Other than that, if it continues to sell off, then let it bleed, right? The more it sells off, the cheaper price you can get it for. So why be in a rush to try to overpay? Give us a good one. Yeah, I'd love to break down a good one. I haven't seen anything as of right now. Let's do Redfin. You need to share with me the ticker symbol. I don't know all of the. You're just telling me the name of the company, and for some of these, I don't know all of these ticker symbols by heart. Just think about them. There's hundreds of ticker symbols out there. So Redfin, lower highs, lower lows. It's testing its support, kind of like the NASDAQ, right around the EMA and the moving average. But just know that if the Federal Reserve begins to sell back mortgage-backed securities, interest rates are going to continue to skyrocket, and then these companies will most likely suffer as well. So the big concerning part is that when it went from $98 all the way to lows of $3. That's very, very concerning, right? Yes, right now it's trading right around $7, but again, think about that. Do the math. From $7 back to $3, that is a 50% loss, right? So with that being said, it's just like, as of now, I wouldn't try to be early to a reversal, right? Especially with something that's been selling off for 2 years. So I'd be very, very careful with this. If you see potential in this thing moving up, set your alerts and let's follow up with it. So Ricky, what do you think about laser? LAZR. I think I've broken down more than 10, but it's okay. We'll keep going. So if you have your top stock, share it in the live chat and smash that like button for me. Lower highs, lower lows. It looks like it tries to rally from time to time, but it never holds at these overbought levels and continues to sell off. So again, I just looking at the overall bigger picture, this looks like a glorified pump and dump, and it's been selling off ever since its original pump. So I'd be very careful with that. So we got, we've broken down Amazon, I thought already. I guess we haven't. So Amazon's going to have a lot to do with the overall market. So Amazon already got rejected by the moving average. It's an active sell-off as of now. If NASDAQ market begins to recover, then so will Amazon. I think that if Amazon begins to actually sell off and it goes back to retest its same support at $85, then guess what? I don't know about you, but I'm not mad about it. I'd love to buy more Amazon at $85, $90 a share, because we all know that Amazon isn't going anywhere anytime soon. This is not a stock that I view as a trade, but it's more as a long-term position. I think that a lot of people are going to look back to where it's at right now, and 5 or 10 years from now, they're going to regret that they weren't able to buy Amazon at $90 a share, because they were like, oh, but maybe it could drop to 85 again. At the end of the day, 5-10 years from now, when Amazon is trading at 3 times, 4 times its current market cap, I don't think too many people are going to care about a $3 to $5 difference. Remember, if your intention is to invest long term, it's not necessarily about timing the market, but just spending time in the market, especially at these very oversold levels. So, but again, that's just my opinion on this. Let's go ahead and do one more. Let's break down waste management. I like that call out. So waste management, this is actually we don't break this one down too often. So it's an overall active uptrend. That's one positive takeaway right away. I like that it pulls on back from time to time, and then it recovers, pulls on back, tries to recover, pulls on back, tries to recover. The only concern that I want to bring up right now is that last time that it pulled back, right, it didn't go as low as it did before, which is good. That's a higher low, but it didn't go and make new highs. That's a concern, because now this is showing me that our resistance is at 174, 175 range, right? So now that it's pulling on back here, it's testing that same support. Now the question is, are we not even going to go back to 168? Because is it now going to begin to form lower highs and lower lows? So just understand that just because it's been an active uptrend before, it doesn't mean that it has to continue. But I do like it at where it's at right now. So if it does break, if you decide to get in, but then it breaks back below 148 or begins to form new lows, I would get out of there. But if it finds its support here, begins to indicate signs of a reversal, I wouldn't be afraid to lock in profits right around that 168, just with the concern that it doesn't form new highs. So my fear would be that it tries to recover, gets rejected by the moving average, and then sells right back off. So just make sure that if you do decide to buy in early, that if it does break below its support range, then that would be concerning. That would be, to me, a break of pattern. I would get out, because it's been consolidating. Normally it consolidates before it begins to sell off, but a decent setup. So I appreciate hearing your thoughts on these stocks. Glad that I found your channel. I appreciate that, man. Thank you. I'm going to do one last breakdown, and I saw a lot of people asking for me to break down Apple. So Apple's a machine. Apple is kind of its own thing, where Apple's testing its support range right around the moving average and the EMA, very similar to the NASDAQ market. Remember, it's all about what happened this week, right? So going back down to overall NASDAQ market, right now we are at a support. And you're hearing me talk about this, right? We're here at a potential support. We're still trading above the moving average. This is a good sign for NASDAQ, as long as we hold above 290. If you see QQQ beginning to trade below 290, then you can begin to get like a little bit more concerned. But again, you just have to make minor adjustments. And that means that we broke our support and we have the potential of continuing to sell off, which means that more selling pressure might follow, right? It's great for short sellers. It sucks for people that were invested, but guess what? If you reduce your position size up here and market begins to sell off, then you can buy more at lower levels. You don't have to, but it's just an option. So I'm very excited for it. I'm prepared. I know our Learn Plan Profit team is super excited. They did a great job locking in profits. And it doesn't matter for me if the NASDAQ market recovers or if it sells off. There's always money to be made as long as you focus on one thing, and that's direction. So again, if you guys are ready to join our team, you guys know that I work with one team and one team only. It's my Learn Plan Profit group, and they get to watch me trade live every day. They get access to the A to Z video lesson library, our daily group chat, and private access to our TechBuds HQ. It's all inclusive. It's a one-time payment. It's lifetime access. You don't have to sign up, but if you want my time, if you want my help, and if you want the ability to watch me trade live every day, it is the only group that I work with on a closer basis. That is all that I offer. There's going to be a bunch of fake accounts that are on different social media platforms that will try to reach out to you pretending to be me. I'm sure you've seen all of these spam things where they'll like ask you for money that they'll trade for you. I don't do any of that. I offer one thing, and it's so you can watch me trade live every day. So it's a one-time payment, lifetime access. We're running our biggest sell right now, and it's the second link in the description down below. You don't have to click anywhere else. It's the second link down below, $150 off. Once you sign up for LPP 2.0, within the first section, it will say welcome. Watch these first 3 videos and it will explain to you exactly how to watch me trade live every day. So by signing up today, you can watch me trade live as soon as tomorrow at market open. So I really do appreciate you guys' time. I hope that it earned your thumbs up in this video. If you have any questions, feel free to shoot me a direct message either via Discord or via Instagram. And that's the first or third link in the description down below. Don't forget, if you want to learn more about our TechBuds apparel giveaway, we're going to be giving away a new 2019, I guess not new, but a 2019 GTR. And this is all going to be at shoptechbuds.com if you want to learn more about it, or the 4th link in the description. And this starts in the month of March. So again, I will see you Learn Plan Profit traders tomorrow at Market Open for our live trading session. And also, I'm using the Webull trading application. So if you guys want to use the same trading app that I am, it's free and available for everyone in the US. Right now, they do have a limited time promotion that you can earn up to 12 free shares. And that is that 5th link in the description down below. So yes, those are a lot of links. But if you're interested in getting plugged in into the overall market, just take a few minutes. All the links are in the description. And if you have any questions, you know exactly where to reach out to me. Like always, let's make sure that we end the year on a green note. Take care, team.